hard to decompress for me for a weekend, though. I don't know.
Because the travel, yeah.
Yeah. But no, we definitely need to do that. But let's get into it because we've got some interesting movement. Dollar absolutely hanging on every. It's interesting though, really quickly. Now the new president's been in office. This will be his second full day. He's talked tariff. He talked tariffs to China, tariffs to Mexico and Canada, 25% starting February 1st. How we picked that number or that date, whatever it is, we saw the dollar get sold because he didn't mention tariffs in his inauguration speech. Came back later during the executive order, mentioned it, and we saw a dollar get bid. And then we saw it kind of get sold off yesterday towards the afternoon, and a little bit of follow through this morning and last night. Now that's turning a little bit. U.S. interest rates are starting to grind a little bit higher. Not much. We're still at like 113.5 of the bonds, which is off the sub 112 lows. But what's interesting is he's now talking about. You mentioned tariffs on China. It's been only 2 days, and every time he mentions tariffs, there's a little less elasticity in the reflexive move. I mean, the first one we had, no tariff mention. They sold euro down by almost 100 pips. Mentioned tariffs, euro rallied by 100 pips when he didn't mention it. When he mentioned it later in the day, euro fell by about 80 pips. Now he's mentioning it, and they're moving by 30 pips. So it really speaks to the kind of the T word being mentioned in the news cycle. Yeah, it stinks that you're getting these. It's good and bad. You're getting two-way action off of somebody just mentioning a word. But we're seeing that there's less and less of just the randomness of coming forward. But there is two-sided action. There's people willing to say that this pullback in the dollar is an interesting place to buy. And I guess the argument is, yes, we have a new president. What's changed? Interest rate divergence is still there. Are U.S. rates actually topped out or not? And they're giving you better levels to buy the dollar? Or guys are saying, now there's two-way risk, and maybe we're seeing a little bit more of a correction. So
yeah, and it is really funny when we talk about tariffs, and you think, well, this is all a U.S. dollar story, but the U.S. is in such a position that these tariffs are actually directly related to the other economies' growth and our ability to really extinguish a lot of their growth if steep tariffs are enacted. So it has been super interesting. Yeah, we're looking at U.S. dollar, Canadian dollar, that back and forth directly with some of these non-tariff and tariff talks. But what I did find interesting is, as far as I've read into it, not a lot of China talk. That was in the very first, when everyone perused the first speech.
Right.
There was no tariff mention and no tariff, no mention of China at all. And even when he did, it was mainly Canada and Mexico.
Right.
No, it seems that there might be a fostering relationship with China, and so now we're looking at these moves and just off of hearsay. But I was curious if you thought that even though it is kind of coming in with each mention, if there is still maybe a big move headed for this Australian dollar, if there is a big China headline. Do you think there's any juice in that?
You mean a big China headline that worth slapping on?
Right. Yeah.
Tier.
Is that it's been majority?
He had a beautiful phone call with Xi, and now it's all good until it's not.
And is that what we're waiting for here? Is we've seen a little bit of sustained growth here. We're looking at the hourly chart. So here's Monday, the start of Monday. A lot of back and forth still, but we are slightly a leg higher in this Australian dollar.
Absolutely. And you know what? We're getting up, we're getting down, but I think this will be an interesting week because, number one, the tariff word will have less and less impact on things. We're at awfully cheap levels. 62, 63, 61 are all cheap levels in Aussie. Same thing in Kiwi. Anything below, 56, 57 cents. And Are we up on the day? Yes, a little bit. I think from a back and forth, if we can hold on to these levels and build a little bit on them, then you're starting to challenge a little bit. You're getting to a two-way market risk. And what I mean is some of the guys who've just been pounding, been long dollars, selling Aussie, selling Euro, selling Sterling, are going to be put to a little bit of a challenge. And do we extend a little bit further to the upside? And you've got to think too, if he does come out and throws out, now he's angry at China for some reason and throws out, we're going at 25% tariffs to them. He's doing that with Aussie at 62 cents, not at 70 cents.
Right.
So, I think what that does is give you both sides. If you want to trade the range, you got range to trade here. And I think the one thing we talked about a little bit, Frank, yesterday is if you get some play on these, manage some of the winners. Don't make it an all, I either got to be in for the ride and this stuff's going back to 65 cents and if it does, it's great. I know that if I was long, I wouldn't have all that I had on now at 65 cents. I'd be piecemealing some of them out. Wouldn't necessarily be turning myself around and playing the other side. But you want to, because this is a market that, again, will get news headlines that may give you an extension to the upside if you're long to manage some of that, but also probably some sort of pullback to
at any time.
At any time.
You can look at the economic calendar.
And you're getting that this morning.
Yeah.
When I woke up, I was up early this morning at 4 o'clock Chicago time. Euro was putting in highs. Aussie was putting in highs. Dollar Canada was sold off. They've all rolled over a little bit now. And does that have to do with the bonds weakening or people taking a little froth off of it? Combination of all of it. It's never just one thing. But I think as a trader, what I want is two-way back and forth. And I want to manage that. What's also is nice, too, and you brought up a good sense, is we're at the upper end of this relatively, we got the spike, the pullback, and the spike. We've got nice defined areas of if you do want to be long or you want to be short, you could start to set up that decision-making process of, okay, this is an interesting value area. I want to be long. I know where I'm going to manage them because there's structure below it that if it's violated, you might want to consider that's where you take them off. And to the upside, if they run a little bit, this is where I want to manage. That's what I like to see in a trade is both whether it's value that I think they're cheap or value that it's had a good bounce and I want to sell them. Where can I put this trade on? Where can I manage it if I'm wrong as well as manage it if I'm right? Now you're not just buying a new low and a new low and a new low because it's cheap. And
exactly.
That's the one thing is if the only thing I can say about this in terms of structure is it's so cheap, you need to be a little bit mindful that if you want to play that game, play it small with the idea that it's so cheap until it's cheaper. Because we saw this. Go to Kiwi, Glenny. We saw this exercise on the march down from 58 cents to 57.5 to 57 to 56. Now, if you started inventory some stuff at 58 or 57.5, if you started small because you really thought these are multi-decade lows, and I don't think Kiwi's going to stay here for whatever reason, if you had started small and incremental and added a little bit rather than just your usual trade size, there you're at a difficult inflection point because if you bought them at 57.5, where are you getting out?
They're nowhere yet.
Anywhere. Well, but anywhere underneath is just a falling knife. So, but if you wanted to play the longer game, and that's a different type of swing trading, longer term trade, build that position incrementally with, and here's the thing is when you do that, sometimes the market does turn. And if that's the case, that's great. You've already got good cost basis on some of them. You can add a little bit more. You don't always have to be buying them at lower levels. And if you do so incrementally. But what this market is finally giving you is a little bit of back and forth. So you can buy, manage, and reset. And that's great. That's what I want. I want action back and forth. And that's what we're starting to see. So it'll be interesting if by the end of the week, we still have a BOJ rate announcement. And the yen is actually very detached from this kind of move.
I'm glad you bring it up. Yeah.
Yeah. This is yen traditionally is its own animal, and it is.
Yeah, and if I tighten it up, I'm glad you bring this up. Now looking at the hourly chart, in recent news with all that's going on, yen not as talked about, but we do have a BOJ meeting coming up tomorrow night. We have Japanese trade balance tonight.
Right.
And I just ran the numbers right before the show. Nothing visual, apologies, but I did run the correlation on the yen and the 10-year yields.
Yeah.
And that has been strengthening. Now it's around a 0.6 correlation.
Okay, that's significant.
Exactly. So
anything
so
over 0.4, 0.5 is significant. So.
Right, and so it's definitely not all the story, but it appears to be a major component, at least now in recent months, with that rolling correlation. So as dollar yen increases, you tend to see an increase in the 10-year treasury yield as well, and vice versa. So not any causation there, but these markets have moved more in tandem than they have maybe in the summer of last year, when it was a lot more Japan-based news.
And so, I think that's great context as a trader. You want causality. What's causing markets to move? Number one, it's never one thing.
Right.
And it's never the same thing over again. They're not perfect proxies for one another. But that is, again, that's a kind of, again, Glen drives so much of our content and engagement. That's a kind of really, I can draw a bunch of lines on this chart. And again, I know there's a technical analysis. If it works for you, that's great. If you're basing all your decisions on it, it's a little bit more challenging because you never want to obfuscate your decision making to a line.
Right.
If it's part of your process and it's productive, that's great. But when you start to talk about, okay, why is the yen not? We're not getting the same reflexive moves. It's not the subject of the T word, but
yet
right. And who knows? That could come up at any point if he gets angry. I think the interest rate play continues to be. I mean, they're talking about taking their base rate from 25 basis points to 50 basis points, if I'm not mistaken.
Yep.
We're 300 basis points higher than that, 350 basis points higher than that. So a big divergence there in rates. But as a trader, that makes yen a little, and I'm more mindful of where's the 10 years?
Right.
Are we down on the day or are we up on the day in terms of yield? And we know that doesn't have a perfect correlation, but it'll have a knock-on effect that will cause the yen to diverge a little bit from the rest of the dollar majors.
Yeah.
Good takeaway on that.
I just think it's really important with all these currency markets, especially because you have two currencies at once. These currencies are attached to two countries or regions, and so there's a ton of storylines, a lot you could hang your hat on. And so if you do have something like that historic correlation where you can kind of weed out some of the noise and say, okay, now there is a basis for why this one is moving a little differently, then that especially I think helps a lot in terms of creating a structure and ideas and strategies. But I was curious your thoughts. Maybe I'll do a deeper research segment on it later. But with that correlation and the time zones being so different with the U.S. and Japan, you have the potential that this market trades 24 or 5.
Right.
So is there any divergence with the correlation is greater during the U.S. session, and then maybe overnight we see when there's Bank of Japan, Japanese inflation data, all their economic data, is it more in line with, does it move with Japanese data and not so much the 10-year because nothing's going on here?
It's a good question because honestly, the bulk of Japanese data comes out between 8 o'clock at night our time and 1 in the morning, and for the most part I'm asleep. So I don't know. It's a good question. In other words, does that correlation break down on an intraday basis? It would be an interesting one to run at some time. I think it's probably a recurring theme. I mean, if you ran intraday correlations, would it ebb and flow? It always will, just because they're not perfectly correlated. I think when you get binary event, something of value from a data release standpoint. Again, the value in data releases in my mind is not the data; it's just the movement. I think you maybe do see it, but I think this theme of it being rate sensitive. Now you'll see, because again, if 10 years go on a tear at 6 o'clock in the evening and they rally, you'll see dollar yen weaken a little bit. So
Right.
that correlation will still hold. Whether or not that weakening stays is again, that's part of the reason they're not perfectly correlated. This is one that really, I feel like this market hasn't made up its mind yet.
Right.
So,
Yeah, if we zoom out here, we definitely get
I mean,
some ranges, but
right, but we're for the first time we've spent a little bit of time. Now, granted, it's 3 days, but we've spent 3 days at the lower end of the range and below a fair amount of clutter before it. That's interesting. That speaks to a little bit of two-way risk. The only thing I can say is if they don't hike rates, I got to imagine we're going to see 158, if not 159, really quickly. Whether or not we stay there, because if they don't hike rates now, that just means they'll probably hike them the next meeting.
but
So
that doesn't mean that in the time between that they intervene personally. They around this 158.
right, that algo-driven reaction will be definitely. We'll see a quick trip up to 158.
Right.
I don't know. They seem to have a pretty high probability baked into their equivalent of, Fed now, the way the CME looks at Fed funds futures, that they're going to hike 25 basis points. I don't know. Again, we don't know.
And what's the color around it? They have a ton of other balance sheet problems that take the headline a lot of these meetings.
And we know if they do hike, we'll probably see dollar yen a little bit lower. If they don't, we'll probably see dollar yen a fair amount higher because they've kind of baked this one out.
Sure.
So this will be one watch. So it'll be interesting to see if we actually get movement before that announcement, and that's tomorrow night, right?
Correct. Yeah.
Okay.
And
they never put this is one where they don't put a timer on it. They give you like a 3-hour window, which I hate because I've tried to stay
When we're ready,
up.
we'll say it.
I've tried to stay up for the 3-hour window and inevitably I fall asleep at my
horrible.
desk, so it sucks.
Yeah. But regardless, you have 24-hour action possibly coming your way in this dollar yen throughout the remainder of the week. So.
You do. So that'll be interesting to see, and the follow-through on Friday will be interesting. So we've got a lot of movement, a lot of action. Thanks for tuning in.
Thanks, guys.